Wipro announced its second quarter numbers. Let's go across and speak with the Wipro management, the CEO T.K. Kurien, the CFO Suresh C Senapaty, and the Executive Vice President of HR, Saurabh Govil. Gentlemen, appreciate you joining us here on CNBC-TV18. And let me start by wishing you a very happy Diwali. My colleagues Kritika and Surabhi also join me in wishing you a happy Diwali. But Mr. Kurien, let me start by asking you, sir, there has been disappointment as far as the dollar revenue growth is concerned, coming in at 1.8%. And my question to you is very simple. It continues to be lower than your peers. When are you going to catch up with the industry average as far as dollar revenue growth is concerned, sir?
So, Sharon, very quickly, I think, if you look at our guidance, the one that we had, the range that we had given was between 1.7 and 4.1%. We've ended up at 3% in constant currency terms. Where we've lost out really is in the crosses. And we have lost 1.2%, which is roughly about $20 billion in the crosses. And to that extent, our belief is that there's nothing much we can do about currency movements. We have an inordinate exposure to currencies outside the US dollar, and that's really what's contributed to this. Now, it could very well swing in the other direction if the currencies move in the other direction. To that extent, one-time gains and one-time losses, I really don't bother about it too much. Really, the growth number you should be looking at 3%. As far as growth is concerned, if you look at last year to this year, overall, our growth has been better. Right now, if you look at a year-on-year basis, our growth is running at 8.6% in dollar terms, in spite of taking this hit. So to that extent, we remain pretty confident that we will improve as we go along, especially in the second half of the year.
If you can give us some indication and color on the kind of pressure that your top clients are facing, and Mr. Premji, when he was speaking earlier, said that he anticipates a pickup or a turnaround coming in as far as December is concerned. If you can give us some sense of the client mining that you anticipate as well.
So if you look at our top 10 accounts, we've been very clear about messaging it last quarter that we would continue to have softness in our top 10 accounts, at least for 2 quarters. We expect that softness to go away in quarter 4, which is first quarter of the calendar year next year. And more importantly, it's very, very specific to some customers that we have who play in a particular part of the commodity cycle. If you've seen commodity prices the way they've gone, especially oil prices and natural resources, they've been on the downward trend, and that's resulted in cutbacks as far as capital expenditure is concerned. But that's temporary. It'll come back. It'll come back not necessarily as capital expenditure. It'll come back more in terms of maintenance revenue as we go along. So that's a short-term phenomena which we see kind of coming back. But overall, I think we are pretty confident that as far as top 10 is concerned, we'll come back in quarter 4. More importantly, I think one of the numbers that's not very clear out there is, if you look at the $100 million accounts, now we have, on a quarterly run rate basis, we have 11 accounts which are at 100 million. If you look at our new account acquisition, we have grown 50. We've got 50 new accounts this particular quarter, in quarter 2. And that's what gives us confidence as far as our guidance is concerned in quarter 3.
Sure. Mr. Kurien, let me come to 2 parameters which the street will really focus on Monday morning when we reopen for trade. One is this degrowth in the European business, and now Europe is a very significant geography for you. And in terms of verticals, the degrowth in the financial services space this time. Is this a one-off, or are there some disturbing trends perhaps that might trickle into the next quarter as well on both these fronts?
So as far as Europe is concerned, and as far as top 10 accounts are concerned, again, very specific to BFSI and to energy and utilities, which is the E&U segment, which really contains our natural resources. The degrowth in Europe is specifically linked to those accounts that we have in natural resources and BFSI in Europe. We expect that to continue for one more quarter, in quarter 3, but in quarter 4, it'll be back.
Mr. Senapaty, if I can come to you, because there has been disappointment as far as the margin picture is concerned. Can we expect Wipro to regain ground as far as margins are concerned?
I'm sure you can expect, but as we said, always, whenever you give a compensation increase, it hits and then the recovery happens over a period of time. So we have given a compensation increase effective 1st of June. So quarter 1 had an impact of 1 month, and there is an additional 2 months impact that we got so far as quarter 2 is concerned. And yet, though the manpower related cost has been about 1.5%, the margin decline is only 80 basis points. So there has been productivity improvement, whether it is utilization, offshore, and a little bit with respect to certain income that we got out of sale of some strategic investments and so on. So in a shorter term, yes, there will be some amount of volatility because the investments, acquisition of customers, a little bit on-site, people additions that you do, it doesn't start billing immediately, particularly when you do campus hiring and so on. But on a medium to longer term, will this kind of margin sustain and have a positive bias? Clearly, yes.
But in the medium to short term, you anticipate a further decline in margins, or do you believe that margins will remain where they are at this 22% kind of level?
I said that in medium to longer term, the margin can be as good or with a positive bias.
Okay. Mr. Govil, before I toss it across to Kritika, a quick question to you as far as utilization rates are concerned. I understand that gross utilization is perhaps the highest that you've seen in about 6 quarters, coming in at 70%. Is there room to squeeze out further?
Absolutely, Shireen. You know, I think we had a good story over the last 4 quarters. If you see, we have increased our utilization by 400 basis points. And clearly, given the hiring which we have done in this quarter and the net adds, we clearly see a room for us to improve. There's headspace for us to improve utilization as we move forward.
So, Mr. Govil, what's the comfort level that you're looking at as far as utilization is concerned? How much more can you increase this?
A number or guidance on utilization very clearly, but we have seen the traction over the last 4 quarters. I think we keep working on it and making it going. But I think you should look at the overall supply chain, both from utilization point of view, attrition, it has come down, as well as the hiring which we have done, the net adds we have done. All 3 gives us headspace for us to improve, and we will see improvement as we move forward.
Sure. Take a quick question to you. In terms of infrastructure management services, the growth for this quarter has been phenomenal, but finance has been slightly tepid. Take me through the vertical exposure that you're seeing currently, and is there a possibility for a further decline in finance? Because that's a sense that we have been getting from your peers so far, that you could see some amount of decline in BFSI in the next 2 years.
So here's what we are seeing, and this is the color that I can give you sitting where I am today based upon knowledge that we have over the quarter. Budgets for next year are still not firm, and I think it's only going to be in February, March that we'll get a sense of what the full year budgets are going to look like as people come back from vacation. But very quickly, if I look at markets, I think healthcare has done very well for us. They've been doing well for us over the past couple of quarters. And this is primarily driven by events specifically around healthcare reform in the U.S. If you look at energy and utilities, this continues to be a strong play for us, in spite of the fact that we have had issues with natural resources. We've still done well overall as a vertical. If you look at BFSI, I think we saw the softness that we saw is going to remain for this quarter and the next into quarter 3. And then in quarter 4, we expect to see a bounce back.
Okay.
Our basic, focus really is banking. And banking today, we continue to be a leader in some parts of the world, especially in the UK and Northern Ireland. That's really the focus area. As we spread across continental Europe, we see that kind of improving. The area in BFSI where we continue to kind of have insignificant presence is insurance, and investment banking is another area where we can clearly do lots more in terms of making sure that we get market presence. So that's broadly how we're divided. So net at the end of the day, we see strength in banking.
Okay.
We see the underpenetrated in insurance, which is an opportunity, and capital markets, we clearly have to bring back growth. So those are the 3 areas that you may look at from a BFSI perspective.
Okay, fair enough. TK, quickly, I wanted to ask you about your Q3 guidance. I don't mean to sound glass half empty, but people have been talking, analysts have been saying that this is lesser than what they were estimating. Q3 is seasonally a weak quarter for IT companies. I understand that there are several furloughs, but what are the other factors that you have taken into consideration before giving your guidance for Q3?
So our guidance philosophy really hasn't changed. What we do is that we look at revenue that we have based upon the contracts that we've signed in the previous quarter. Typically, we have a 98% view of where revenue is going to come in, which is locked in. The balance 2% basically comes in from deals that are going to come in during the quarter and effort that we expend during the quarter, and that's how we come to a guidance number. Frankly, given the lesser number of days that we have in the quarter and the furloughs that we expect in the quarter, our belief is that a 3% is 2 to 4% is a decent number to have, and that's really what we are after. So to that extent, you know, it's a reflection of what we've done in the past. It's a reflection of how we're going to bill out in the future, and that's what we have.
We also do supplement, you know, we're seeing some amount of momentum in the IT infrastructure services, the BPO services, because there is a lot of good deal wins that has there, and we're still seeing a lot of good funnels there. And also, if you look at an India market, a little bit, we have seen already some pickup happening in Q2, and we are also expecting some more pickup happening in Q3, particularly in the telecom space as well as the financial services. And you see already some amount of growth we have started getting back in the manufacturing space and RCTG space. Healthcare continues to be a good growth driver for us. So some of these, and we added about 50 customers that you saw, added headcount that you saw. So from that perspective, some of that has been embedded despite some of the softness that you were talking about in the Q3 guidance, and hopefully we're going to maintain that trajectory with a positive momentum as you go beyond Q3.
Okay, Suresh, just coming to you again, you know, what I'm asking is the next 1 year isn't as positive as all the IT players have been talking about. Can you take me point by point to the softness or the areas that could be a concern for you globally and specifically within your operational performance in Q3 specifically? You say that Q4 could be a bounce back. Q3, what are the issues that you are right now working to mitigate from various parameters?
You want to take it?
You go ahead.
So I think it's like this. It's kind of it's a difficult question to answer. Simply because, you know, it's like this. You ultimately play with a portfolio. In a portfolio, what happens is that sometimes you have good components of the portfolio, sometimes you have bad components of the portfolio. You can't throw the entire portfolio out of the window or just retain the good guys and just don't bother too much about the bad guys. Because once you do that, the overall portfolio performance will suffer. So if you ask me what keeps me awake at night, which is a better way of kind of asking that, it's pretty simple. I think the only thing that keeps me awake at night today is execution. We have to execute to the quarter, and we have to execute to the next quarter, and that really comes about just in two fronts. It's about winning new deals and delivering whatever deals we have done with customer satisfaction at a cost which makes us profitable. As simple as that. And that's the daily grind that we live in.
Okay. TK, let me ask you then, how is the order book looking like? Can you specifically tell me in terms of $50 million plus deals, $100 million plus deals, how is the order book looking like in Q3 and Q4 currently, if you could give me a quantum to it?
So our pipeline looks healthy. Our win rates have improved. We expect to see pipeline continue the way it is. Our pipeline for this particular quarter has been very good, Q2. We expect to see momentum continuing in Q3. Q4 is a little too early to call. We don't know what deals are going to close, what's going to get delayed. To that extent, I wouldn't call out Q4. But Q3 I can call. And we seem fairly optimistic about Q3.
Okay, fair enough. Going ahead in that case, TK, a quick wrap up from you. You know, we've been talking about Wipro finally looking at a turnaround, bringing clients back, winning deals, and, you know, going back to industry leading numbers. Shireen asked you this in the beginning itself. Could you give me a timeline? TK, Suresh, the question flipped around to both of you. Could you give me a timeline as to when Wipro will be back to industry leading growth numbers from the top line, from the bottom line? Can you give me a timeline to that?
So if you look at the past couple of years, we've been making progress. We've been making progress slower than we expected, but we've been making progress. This year, if you look at our year-on-year number is at the end of Q2 is running at 8.6%. This is in spite of the fact that we didn't have exactly a stellar Q1. So we've also guided that the second half of the year should be better than the first half. And with that, I think we are kind of optimistic that as far as we are concerned, we'll get back to growth rates which was higher than last year this year. And then let's see where we go after that. It's too early to make a 2-year call on which way we're going to go.
Okay, but so Suresh, I'm going to toss that to you as well. How long till we can see Wipro back to industry-leading growth numbers? And you have been there for quite some time. I'm asking, by when would you be back there?
Sooner than later.
All right. Thank you so much, gentlemen. Appreciate you joining us on India Business Hour.